morning for this Monday, April 7th. We're going to talk about the two stocks that we've been talking about last week, those swing trades that I showed you, okay? The first one we're looking at right now is the stock Q. Remember we went long at $50.58. Remember that? 58. Okay, we were looking for the market to move up to about 51.98. Remember that? 51.98. The market rallied to 51.5 up in here. What we did on Friday was we moved our stop up to below Thursday's low to about 50.76 to lock in about 20 cents, okay? Because the market had been moving up very slowly, not with any real conviction or momentum to the upside. So we decided to move our stop up and trail that up. So this video is going to show you the power of really trade management. Trade management is so very important because Friday the market got killed, right? And that took down most stocks as well, right? So what we do when we're in a trade is we just don't set our initial catastrophic stop, look for a profit target and go away and hope hope that profit target gets hit without managing the trade. Managing the trade is perhaps one of the most important parts of trading, obviously, right, along with position sizing, trade management. So the market came up, matched Thursday's high, couldn't take out that 51.5. We moved our stop up to 50.78 on Friday, right, or it was 50.76 rather. The market just moved a lot. I mean, if you remember, the overall market got crushed, and it took Q down as well, and it stopped us out. Okay, so that's no big deal. So again, below Thursday's low took us out with pretty much a break-even trade. Made maybe 15 cents on the trade. No big deal. So that's the importance of moving your stops below significant levels. And one of the significant levels is below a low of the prior day if you're long the market to kind of trail that up. The other one I want to show you is the stock Ecolab, right? ECL. Now, if you recall, we went long ECL last week at 107.18, right? 107.18, right in here. Market did exactly what we thought, right? We made higher highs, higher lows. Our first profit target at 108.71 was hit. And our next level was 111. We were looking for 111 as our second profit target. Okay, market didn't quite get there, but what we continually did was we moved our stops up to below the lows, right? So on Friday, we moved our stop up to 20 cents below Thursday's low, which was 108.41. 108.41 was our trailing stop, right? So we were locking in about $1.30 on this, right? A little less than our first profit target. So the market sold off along with the general market on Friday, right here, and took us out. But that's the key, right? You need to use those trailing stops, and you need to manage trades appropriately. Because if you didn't have stops in, if you just threw in a break-even order, I mean, you would have been out. I mean, Friday you had a big sell-off, so you got to lock in those profits for those days where the market sells off against your position. Okay, so you see that in Q and ECL, we ended up making money, even though the overall market got hammered on Friday. So now we're even on those. Okay, we're flat the market, and we made money on those two, even though the overall market got crushed. So hopefully you learned a little something there. And again, when you put on a trade, the trade is far from being over, even though you've got your initial catastrophic stop and you've got logical profit objectives in place. You need to learn to manage that trade, manage the trade, and to lose as little as possible and lock in profits when you can. Okay? Have a profitable day, and I'll be back with you tomorrow. Bye for now.